Hello, everyone. It's Marin Katusa here, and I'm doing something very different. I'm going to be introducing a very special individual. First of all, is one of the most accomplished investors in the precious metal sector. More importantly, he's just a great guy and uber smart. I've pretty much got to know everyone in the business, the movers and shakers, the billionaires, the guys who've built big mines. And I got to say, this next individual is easily top three smartest people I have met in the mining sector, if not the smartest. Most importantly, he's just a nice guy. And this discussion we had was actually for my subscribers. I want to introduce Tom Kaplan, who I think is one of the best minds in our business. And I doubt anyone else in the sector understands geopolitical risk to the extent of Tom Kaplan. If you invest in the gold and mining sector, you have to listen to this one interview with the best mind and one of the most experienced investors across the globe when it comes to resource development. I hope you enjoy this interview as much as I did. All right, everyone. We've had a lot of interesting and uberly impressive people from Ross Beatty and Rick and so many people successful in our industry, Pierre Lassonde, speak with us and educate and try to share their ideas and successes and lessons to us. But right now, there's been no one who's been more impressive to me personally. And I think what we're going to cover here is something that very few people in the industry have actually embraced with me. And just to give a little bit of backdrop, this is going to be an interview with Tom Kaplan, who I call the true mining renaissance man. And I'll get into all the reasons why. But this is an uber smart and successful, and in my opinion, the world's leading expert when it comes to understanding the political and geopolitical risks associated to resource development. So Tom, thank you so much for doing this. So we could just give a little bit of color how this all kind of happened through your perspective.
Well, first of all, I'd like to express my thanks to Ross Beatty for reintroducing us. I, of course, met you several years ago in London at a mining conference where, if I recall correctly, I was being interviewed by Rick Rule. And you introduced yourself and struck me as someone unusually intelligent. And well, years passed, and I happened a couple of weeks ago to be sent a link by a friend of mine in the hedge fund industry in London, which had you talking about the phenomenon of swap lines. Now, I watched this and came away thinking, wow, first of all, I think I know this person. And secondly, this is an extremely intelligent take on the issue that I believe is truly existential in the mining industry, and particularly so for mining investors, which is the question of jurisdictional risk. And so when I was having a virtual drinks with Ross Beatty and Bob Quartermain, who are two pals of mine, and this goes back to when we were literally competing against each other in the silver industry starting in 1994. But we've become extremely close friends, the three of us, and have traveled together and all of us sit on the board of Panthera, which is now the leading NGO in wildcat conservation around the world. And we share a tremendous passion for wildlife conservation and environmental issues. People sometimes ask, well, how is it that you have so many mining guys who are so interested in this subject? Is it anything to do with guilt? And I go, no, to the contrary. These are all people who, if anything, have decided to devote substantial portions of their fortunes to the environment, and it has nothing to do with guilt. It just has to do with the fact that we believe that this is a subject that is key to the future, not only of the planet, but also of humanity itself. Suffice to say that when I brought your name up with Ross, he had only the nicest things to say and said, can I reconnect you? And I said, actually, I was going to ask you to do so. And he did. And we had a conversation a week ago and started to discuss the issues that we find most compelling, discussed obviously the swap lines, and discussed a broader narrative of jurisdictional risk that I am in an unusual position to discuss with you and with those who look to you for advice in this space. Let me start by saying this. One of the reasons why I can speak to the issue of jurisdictional risk and why I strongly believe that investors should be focused on the safest jurisdictions where the rule of law is the most pronounced. And let's call that for the time being North America and Australia, is because I actually made my fortune in the developing world. I made my first fortune in silver in Bolivia, my second in platinum in Zimbabwe and then South Africa, my third in gold in the Congo, and my biggest success, I suppose, would be actually have been in hydrocarbons in East Texas. But the point is that when I come at the story that we're going to discuss, I don't come at it as somebody who is a squeamish, poorly traveled American. I've been to 110 countries around the world, almost every place, almost every country in Latin America, from Mexico through to Argentina and every place in between, most of Africa, almost all of Asia, Russia, of course, et cetera, et cetera. I was educated in Europe, so I am not provincial. Having said that, about a decade ago, I started to feel that the era that pretty much framed my entry into the mining business and where I found myself in 2010 was coming to an end. And that era, I would say, would be categorized as the era that began roughly when Newmont teamed up with Buenaventura in Peru on the Yanacocha mine. And that began really the massive sprint and the pivot by the big gold mining companies from the safe jurisdictions to the frontier. And it was referred to as the go where the gold is mentality. And I was a beneficiary of that. I followed suit in 1994, found myself in Peru and Bolivia, and then ultimately all over the world. And ultimately became probably the largest holder of mining rights from West Africa all the way through to Pakistan. Certainly one of the largest, and definitely for an American, the largest. But I came to conclude that that era was coming to an end. And that, as Woody Allen once said, I'm not afraid of death. I just don't want to be there when it happens. And that I'd better start pivoting back to countries where the rule of law was not a novelty.
What signs, Tom, did you see, sense, experience that gave you the intuition that, yeah, I'm going to pivot a decade ago?
Well, I started to see that there were rumblings in a number of countries in South America and in Africa that were being expressed through social disturbances with regard to mining projects. And then, you know, what was the indicator to me that I have to really be looking at this issue more closely was actually that Australia started to talk about windfall taxes. It was the iron ore boom and the like. Mm-hmm. And I thought, if Australia can start talking about this, it's only a function of time before some of the other more challenged countries begin to reassess their relationships with mining companies. And I found myself at that particular moment being one of the largest holder of mineral rights in West Africa, the largest in Guinea, but one of the largest in Mali, Niger, Cote d'Ivoire, Senegal, Burkina Faso, then Congo, and then all the way through Saudi Arabia to Pakistan. And I realized, this is interesting. I'd better have a partner who has a flag. I'm a nice Jewish boy based out of New York and Paris, but still, in most of the countries in which I'm operating, it would be nice to be able to have a partner who could just say, he's one of us. And that actually led me to create relationships in the Arab world, in the Arab Gulf. Actually, I'm supposed to say Persian Gulf. It gets Iranians very angry when I call it the Arab Gulf. But I'm going to call it the Arab Gulf. What the hell? But the relationships that we developed there are really the closest now that I have, and I've got great relationships in in the United States and England and so on, Canada and so on. But my closest partners now are the Gulf Arabs, the Emiratis, as the lead in that, but also Kuwaitis, Saudi Arabians. I find that we have a very similar mindset, a very similar attitude towards the power of a handshake and the power of partnership. And I've never encountered better partners in my life. Truly, and I've had fabulous partners, but this is almost at a cellular level in terms of a non-transactional way of looking at doing business. So that, created partnerships in the Gulf, which by the time we concluded our partnership, I had told them that I've changed my mind, and that whereas when we started our discussions, I was 50% North America, 50% other, I wanted to go to 90% North America, 10% other within 18 months. And I did so. And they were fine with that because they determined that I was someone that they wanted to do business with. I felt likewise. And so they trusted my judgment and have been with me ever since. But what happened was there really was a transformation. I exited almost everything in Africa, with the exception of some residual investments in South Africa, exited everything from in Asia. And in fact, I would say now, in terms of our focus, we're 100%, 95% North America and Australia. And in terms of our footprint, probably around 90-10 in terms of our balance sheet.
Great ratio. So to explain to everyone why I gravitated to Tom was Tom was the first person out of hundreds and hundreds of comments and industry comments where it was positive. And just so subscribers understand, I have received so much hate mail and so many negative comments on the swap line stuff. Yet, as Tom and I were talking about, not a single mining executive or chairman of a producing gold company that I spoke to even knew what a swap line was. They came back saying, oh, Marin's just showing off his calculus, to Marin's just trying to sell newsletters. I'm like, that's not the intent here. Like, this is for my subscribers. And like yourself, Tom, I'm probably more than 90-10. I'm closer to 95-5 in the de-risked and really, so I thank you for reaching out yourself. And interestingly enough, I don't think he's an investor, but he's more well known as an author, a guy named Robert Kiyosaki, who wrote a book called Rich Dad, Poor Dad. He's the only other person that reached out to me with a positive comment when it came to swap lines, other than my subscribers. But the industry hated this. So I actually got, Tom, as we chatted, I got my team to go through all the financings and projects. And no wonder the industry hated it. It's the exact opposite of our situation, where about 85% of all the financing and projects of these publicly listed companies are in negative swap line nations. So they don't like that, this narrative that you and I are talking about. So, I call the swap line, the positive swap line, the first filter test. And there's areas within the positive swap line nations like in Canada, I won't play ball in BC, and I'll explain why. Right now, with the political jurisdiction in the province of British Columbia, 15 years ago, I was one of the founders of what eventually became Canada's third largest producing company. And I have watched truly the backwardation of permitting process. And we were in production, but I saw other companies and just all the meetings with the government and with the First Nations, it just went backwards. So let's really dig down, Tom, a comment you made that you think I'm being even too generous with the swap line. And I really want to dig down how even within some of the swap line nations, you wouldn't invest in any of them. So let's really dig down deep into that.
Well, first of all, I'm not playing to my audience, but I admire your guts. You speak truth to power. Candidly, one of the things that I was thinking to myself when I saw the interview that you gave on swap lines, and knowing where you live, I really thought this is somebody who is literally telling the truth from the belly of the beast, almost a Diogenes-like moment. And I love that, because I've never gotten any joy from anyone in the industry over pronouncing this doctrine that actually someone called, you were aware of the Real Vision interview that I gave to Dan Tapiero, where he sprung this on me, where he called it the Kaplan Doctrine, about jurisdictional risk. And that is very simply, whereas my mantra prior to, let's say, 2012 particularly, was try to find the greatest assets that will give you the greatest leverage to an underlying thesis. And I say that not necessarily with referring to gold itself, but it could be gold, it could be silver, it could be platinum, it could be hydrocarbons. Go for category killer assets. I've always found that, it takes as much management attention to build a small mine as a big one. And candidly, the assets that achieve the premium valuation upon exit, no matter how you exit, are usually the ones that move the needle. So that was my thesis. Go for the greatest assets, which give you the greatest leverage. And then I altered that with adding to that, in jurisdictions that will allow you to keep the fruits of the leverage.
Exactly.
Okay. And I mean, it does make a lot of sense, but it doesn't make you a lot of friends, because most of the mining industry is stuck. I mean, literally stuck. So if in real estate, the mantra or the adage is location, 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 it's even more pronounced in natural resources, because if you have a mine, you basically have, be it an open pit or underground, a hole in the ground where you are now functioning due to the generosity of strangers. And when people say you are exploiting the endowment of these countries, you're only there as long as you have the social and the political license to stay there. And I believe that once one country or two countries challenge this and get away with this, it's like potato chips or popcorn. Nobody eats one chip. Nobody has one kernel. It becomes a wave because it has to. When you game it out, if one country gets away with changing the rules on a mining company, the country adjacent to it, or skip one over, is going to say, well, we want the same as they do. Either the opposition will hold the government's feet to the fire if it's a democracy and say, why aren't we getting for our natural endowment what country X is getting? And the government will have to give in to them. Otherwise, they appear to be complicit in some sort of a sweetheart deal. By the way, it even works in dictatorships. No dictator wants to have to say, well, I'm aligned with the mining company. That's over right. My own people. And we saw an unbelievable example of that just a couple of weeks ago, not in a dictatorship, in Papua New Guinea, where in the prime minister's response to Barrack, and notably a Chinese partner, Xi Jinping, the response made reference to what I thought was an absolutely fascinating concept. When Barrick used the word nationalization as being a characterization of what they were experiencing, and I think that they were right to do so, the prime minister came back and effectively said in a long letter, my job is to take care of my 8 million shareholders. That is about as pregnant a line as I've heard in many, many years. Now, we have witnessed in Tanzania, in
Zambia.
Zambia last week just declared gold a strategic asset. And I actually had an exchange with Dan Tapiero where he said, isn't this what you actually were talking about when we were interviewed? And I said, yes. I said, but I already get enough aggravation from people talking about jurisdiction that when we went into the discussion about what would happen if there were an economic downturn, this was in November. And I said, it was my opinion that if we saw an economic downturn which hit commodities such as base metals and hydrocarbons, as we saw in 2008, 2009, we would see, similar to that previous Great Recession, a situation in which monetary metals like gold initially, and then silver would catch up and probably outperform gold. But certainly the monetary metals would soar in value. And I asked the rhetorical question, what are the odds that a country experiencing an economic downturn, less revenue from commodities, which many of the gold producers are also producers of, and would allow the gold and silver companies to be able to get away with windfalls? I said, in my opinion, I believe that they would be declared strategic assets, and one way or the other, not necessarily overtly nationalized, but de facto or de jure, they would have to turn over their hard currency in exchange for local currency. And of course, you know, unless that country has a swap line, that is a death knell. Now, the reason why, and I love that you tackle this head on. The reason why I said I think that you were being even optimistic is that I do believe, and I'm not saying that we're going to have a depression. Nouriel Roubini says that we're on our way to a great inflation followed by a depression. And I think that if you read between the lines on some of the most sophisticated investors in the world, they're certainly warning about prolonged recession at the very least. I believe that those countries which do not have the ability to print at will, knowing that there are counterparties out there which will accept their currencies, are going to more and more sequester or otherwise harness their more profitable metals exports for their people. And they're going to say, look, you know, this is the ultimate in force majeure. But don't worry, when the crisis is over, we'll give it back to you. We'll give it back
which
to
we know it'll never happen.
Which never happens.
And they're going to use...
That has about as much chance of happening as the Fed basically
bringing a gold standard
getting the debt off its balance sheet, which is to say, you know, we're never going to see it.
So I think a lot of these, you know, when you look at what Argentina was a huge telltale, the environmental minister, that was a canary in the coal mine for what I think the model of many non-swap line nations will use, saying, you know, these Australian, Canadian, American companies are not caring about our water, so we should create a national mining company to handle everything. And they're going to use the ESG, the environmental, social, and governance mantra that the companies have been using to attract investors. And you're going to see the NGOs really use that 3 letters to really be the segue, because the locals, you know, let's think about something here. Let's talk about like the all of the horrific tailings pond disasters you've seen. But, you know, for less than $15,000, you can create a $500 million environmental accident on a tailings pond. This is something that nobody really wants to take head on. And I'm not saying that that's what's happened, but you could see a lot of issues happening there. And the one that I really highlighted was the multiples on NAV that the royalty companies and streaming companies are trading at, and the investment community, fund managers, shareholders, retail, everyone's just assumed that, hey, this is a low risk way to play it, and the stocks have performed incredibly well. But yet when you break down the royalties that these companies are getting from, some of them are at 2/3 and negative swap lines that these companies pay zero tax in those jurisdictions because the way they're structured, they're almost too cute. So I think those are the first that the ministers in these negative swap line nations will go after. And I think it's going to be a massive reality check saying, wait a second, you're taking a stream and royalty on gold produced in our projects while we get none of that. We're going to change that. What do you think of that concept?
Oh, that if I'm the Kaplan Doctrine, and I said to Dan Tapiero when he raised the idea that we should go deeper into the concept of countries declaring gold strategic and the implications for that, and I said I already get enough grief. I'm calling that Tapiero corollary to the Kaplan Doctrine, and we had a good laugh about it. But I have to tell you that the Katusa conundrum is one that had never occurred to me. And candidly, when I saw the stats which you put up in your chart as to the exposure of some of these companies to that issue, not just the swap line issue, but companies that were considered to be probably immune from that kind of risk, or at least de minimis, I found it very eye-opening. And I think it all goes to the issue of this, which is we're in a world in which there are no constituencies who will come to the aid of mining companies, I believe, anywhere in the developing world. I don't believe that the State Department, maybe the State Department in the United States, because of the swap lines, but I don't believe that even Canada and Australia have the reach any longer to protect their companies from the kind of confiscation that I see coming, because countries will put their people ahead of mining companies. And the point that you make about the significance today of ESG only serves to add kerosene to that argument, because what it essentially says is that nobody will come to the rescue from a governmental standpoint of a mining company anywhere in the developing world. There's no mining company big enough that it means something to their host countries that would make them break off diplomatic relations or otherwise cause a boycott of that country. They would just basically say, suck it up and move on. It's a combination of the lower importance that mining has in stock market capitalizations around the world and to the revenue base of companies. And this has been superimposed upon by the story of ESG. And so if you add an economic downturn into that, I think that it will be viewed as an opportunity to renegotiate deals. Now, the fact that we've seen so many countries already embarked upon this process, even before the economic downturn that has come into play with COVID, already indicates to me that the horse has already left the barn. I don't know how I can tell my friends any longer to leave. I first articulated my concerns and my thoughts at a conference which John Paulson gave for gold investors in 2012. And I was phoning in as the chairman of Nova Gold. And Mark Bristow, who's really one of my best friends, is obviously talking about Africa. And we have a a great history together, and we're now find ourselves partners in Donlin in Alaska. But when we spoke, he basically said, "Look, I love Tom, but I think he's a little bit alarmist." And I think now people understand. I didn't mean to be alarmist. I love my days in the developing world. Made some of the greatest friendships I'll ever have. I'm still back in the developing world. Panthera, Ross, and Bob are involved. Obviously, we're in 50 countries around the world, and I'm also involved in other things from a cultural standpoint. But from a business standpoint, I just believe that the frontier spirits, the go where the gold is mentality, I just think it's game over. And when they really rang a bell for me, I told you that I thought that the bell rang to take people into the emerging markets with Jana Kocha and then Peter Monk, who had been so focused only on North America, going everywhere, including Russia and China at one point and all the rest of it. People get competitive juices. Miners are competitive people. Their loins tingle. If you can go to Uzbekistan, I can go to Tajikistan. If you can go to Russia, I can go to China. That was the mentality. I think it's over. And the point is, though, you can't move a mine. You can't go to a lower wage jurisdiction. You can't go to places where they give you subsidies. So you just have to grin and bear it when they come back to you and they say, sure, you had a sovereign agreement. But, well,
Things
like
change.
in The Godfather,
Yeah.
It's either your money or your brains on a new piece of paper. Otherwise, those kids of yours that the expats are getting educated, well, those buses that are taking them to and fro, they're no longer safe. In which case, it's really game over. You're dead, you just haven't been buried yet. So I've been articulating this long enough that I felt I can talk about it mostly to my friends in the industry and say, get out while the going is good. Take it from me. I did as well or better than almost all of you in the developing world. And I'm telling you, it's over. I wish it wasn't. I'm not talking my own book. It's just that I went to the last chapter of the book and it's not a happy ending. Leave.
I'm with you 100%. Can I ask just as a side note for everyone, Mark Bristow is an alpha male, uber aggressive. He essentially did an RTO of Barrick. He's really kind of known as a miner, but he's a well-known hunter of animals, like a game hunter, and you're an incredible wildlife conservationist. So how does that approach like a dinner meeting with him? Like, do you just not slap him across the head a couple of times, or what do you do there?
Well, I'd say we slap each other across the head a couple of times. He genuinely, I can't tell you exactly what I've said to him and to his wife about this subject because you may have a family audience. And it's not necessarily because I was using swear words, just I made a sort of a reference to, to hunting with long guns. But in any event, let's put that one aside. Suffice to say that Mark is genuinely, and I know this is going to sound crazy, he's genuinely a conservationist. And I'm going to get so much flack for saying this. Yeah. Sure, because I loathe hunting. I loathe it with the passion of 1,000 suns. I cannot understand it. I cannot relate to killing innocent animals. To me, it's not a sport, and if you want to take on a lion with a knife, like a Maasai warrior, maybe, I can get my head around that one. But no, I have no truck for this. However, that's not to say that in my mission to save cats around the world, I haven't found myself with people who may not share that point of view, but are nonetheless willing to help me. And not because they want me to save things so that they can shoot them. And the truth is, I haven't found very many people in industry who have shown, and with 100% sincerity, the kind of commitment to helping me save cats in countries that don't allow hunting, because they feel it's the right thing to do. And I'll give you a perfect example of this. One of the things that was most shocking to us when we ground truthed what the situation of the African lion was that in West Africa, the African lion is pretty much exterminated. It's now gone from over 20 countries in Africa. West Africa is depopulated. One of the largest remaining populations is a pride of 50 in Senegal. And that 50 lions is nothing. I mean, there used to be 200,000 lions in Africa. We're now down to sub 20,000, substantially sub 20,000. So 50 in Senegal. Now, Mark Rangold was involved in Senegal. Mark and I are really great friends. You know, if I couldn't find common ground with people that I disagree with, I wouldn't know any communists. I wouldn't know that many Palestinians, and I know plenty of Palestinians, plenty of communists, and all the like. I can overcome those things if other values are shared. Mark and I share a lot of values. Very honorable man. And I reached out to him. I said, Mark, can you help me with this? And Mark had joined our conservation council for Panthera. And Mark was one of the very few people who said, yeah, I can help you with this, and used his influence in Senegal to be able to get us a license to save those cats and to take over control of protecting them, which has been, you know, a great story. Wouldn't have happened without Mark. So, you know, when people tell me that you can't engage with people about or with whom you disagree on a point in order to solve another problem, candidly, that's one of the reasons why the West is so challenged. I don't have to tell you, this country is pretty much split down the middle, and in the United States. But it's not just a phenomenon of the United States. We're seeing it in most of the West. And it's one of the things that's going to give the Chinese a great advantage on a going forward basis. But, you know, my point is this. It's not because I'm new agey, but try to find common ground and ask yourself, are the other issues existential? You know, would I treat with Nazis? No. Do I know that Mark Bristow has probably been responsible for saving a lot more wildlife than he's dispatched? The answer is yes. Do I believe that Mark is an honorable man? Yes. Can we disagree on this subject? Yes. Does that mean that we can't work together to save wildlife? No, it doesn't mean that we can't. And the fact that we have, and many other people who talk big talk and don't deliver, you know, that's a statement. Mark Bristow is, he's a big man in all the right senses of the word. Yeah. You know,
how can people find out more about your wildlife, you know, what you're doing, not just with the cats, but, you know, I believe you're the largest investor or funder, donor of also the alligators and Asian crocodiles. Is that correct?
Reptiles. We're
reptiles.
We're certainly the largest, probably of snakes. I once referred to a regime in a certain country as being like a reticulated python, swallowing up its neighbors, and they claimed to be offended that I'd referred to them as a snake, not understanding that I'm probably the biggest funder of snake conservation in history, and being referred to as a snake in my lexicon is actually a compliment, not an insult. And I'm not even joking. And I was actually complimenting them. But in any event, you know, you can applaud your adversaries for their craftsmanship, even if you disagree with them. You just have to go to Panthera's website, and you'll see that over the last 14 years, we've gone from essentially a startup to now the leading NGO, non-governmental organization in wildcat conservation globally, with about 100 partnerships in 50 countries around the world. As I said, your listeners will note Ross Beatty and Bob Quartermain as directors, and fabulous ones at that. But by all means, if anyone's interested in Panthera, I've got all the time in the world to talk to you, and Marin has my contacts and should feel free to give them. It is probably my greatest passion, and I have several, but it is probably my greatest passion in the world. There's no better way, if you want to save vast landscapes, than to focus on the charismatic megafauna, usually the apex predator at the top of the food chain, because by definition, if the apex predator, the umbrella species, can survive within that food chain, you probably have a healthy ecosystem. And so we have people who are supporters of ours because they love birds. They love all kinds of different creatures that get encompassed when you save, for example, jaguars in the Brazilian Pantanal. You're also saving the largest variety of wildfowl in the Western Hemisphere. So, you know, the umbrella species by definition gives you a big umbrella, a big tent, certainly many hooks in which you can hang your hat when it comes to conservation, but it's a great passion. And there's a reason why for so many people around the world, amongst their top 10 terrestrial animals, for sure, cats usually account for half of them, if not more.
Wow. So we will, you know, you and I'm going to get involved in that. There's one that I'm a huge supporter of also is my good friend Clive Johnson, who's another big personality. I don't know if you know him or not.
We met years ago.
Yeah, he's rough around the edges, but I just love his go-at-her attitude. And he's made it his mission to save the black rhinos. And he's done an incredible job so far.
That's brilliant.
I think, but what his model is very different. What he's done is he's donated the bullion from their mine to make mint bars, and I think I'm the largest buyer of them. And I said, you know what? If you come up with a unique strategy, I'll support it. I'll be your lead order. And they come in 0.5 kilos and 1 ounce bars, and I think maybe even 0.5 ounce bars. And then what they're doing is they've created the charity to be self-functioning from those bars. So every year they produce and mint them, and they have a cool logo, and then they send it out. And then the profits from that, from the premium, it's a 15% premium on top of the spot price. That's how they're able to fund the conservation of the black rhinos. So I think he saved 1,000 so far. They were down to, I think, 50 at one point. So what you're doing, I love. Now, if I could bring it back to the swap lines, there's 15 nations with swap lines. 80 nations have already applied for help, not just with the US swap lines, but IMF. And there's not a single nation that I know in the last 50 or 100 years that has received IMF funds and had a strong economy within the next decade. Do you see more nations getting swap lines from the US? Like, do you see it as a geopolitical leverage that the Americans will use?
It's a little bit more complicated than that, in the sense that America is caught in a little bit of a trap. There's no question every country in the world, including the United States, wants to debase their currency and wants to try to create a competitive advantage. And this is one of the reasons why central banks have been and will ultimately, for the long term, remain large buyers of gold, is that they're acutely aware that their home countries, as well as everyone else, wants to debase a currency. So having a currency that can't be debased, and that the companies that are supposed to be minting that currency can't even find it in any appreciable quantity. And as you and I both know, even if you found, you know, a dozen Donlin creeks today, it would take you 20, 25 years to be able to get them into production at least. So the horse is already out of the barn on that part of the story. But the central banks all want to see their currencies lower, and the United States does as well. But the United States is in the position that it has the world's reserve currency. And were they to let everybody have to scramble for dollars, it would cause a short-term appreciable impact upwards of the dollar, which is something that they don't want to see. So the swap line issue is a function of, number one, being able to serve as a clearinghouse, as an arbiter when countries are scrambling for dollars. And number two, an opportunity to keep the demand for dollars at a level that can be contained so that
No price
the
shocks.
currency doesn't rise. Will there be more countries? And there are definitely a lot of countries which are hoping for swap lines. If that happens, that the United States starts to extend swap lines to countries that are going to be very challenged to compensate for them, it probably means that we're going into a second leg down in a recessionary environment, in which case you might find the United States having to write that stuff off, as we've seen major donors on occasion write off the debts of countries.
Yes.
How that would go down in the United States politically, I have no idea. Were the Democrats to be doing it, I think you could assume that there would be a revolution in the streets, although actually there may be a revolution in the streets going on, but in any event, there might be another one, yet another layer. It would start to look like a Monty Python movie where you have so many different revolutions going on simultaneously that people don't even know what they're rebelling about. But I think that only a Republican administration could get away with giving money to certain countries.
Well, what's interesting about that is that when this was first used by Bernanke, there's an incredible YouTube video where the first time the Senate hearing, and Bernanke in 2009 is answering about these swap lines. And no one's ever seen it before because it was kind of a loophole of the 1913 Federal Reserve Act when it was created. And Bernanke couldn't answer any of the questions. He had to go to his assistants because it was uncharted territory. And the president and it's the Fed, right now, Jerome Powell has all the power in granting the swap lines without the president. And the geopolitical implications of this, like the ECB's at 200 and change billion right now as of yesterday, and they convert that into euros to back fund Airbus, which is in complete competition with Boeing, which is being backstopped by the government. It gets into this whole what the hell's going on here? And the president, once he starts getting that, I wonder if the power of these swap lines will go from the Fed to the House, or the Senate, or to the president's approval, because right now the president doesn't need to approve the granting of a swap line, and it's all in the jurisdiction of the Federal Reserve as the 1913 Reserve Act was written. And the interesting part of this is, what are the derivative implications that they haven't thought through in the Boeing versus Airbus? That's just one example, because Boeing's one of the large, Airbus, the French, is the largest recipient of the French funds from the ECB of the swap line, right? So it'll be interesting to see how this evolves, and if things change within the structure of it. Do you see that changing, or do you think it stays the same?
As I said, while you have a Republican administration, there's political cover for giving money to or engaging in swap lines or other what would be considered to be, let's say, broadly speaking, foreign assistance, because it's like Nixon going to China. You've got the political cover for a controversial move. Had this been a Democratic administration, the ability to give money to some of these countries, I think never, Mitch McConnell never would have allowed it. You would have had people squealing about all kinds of misappropriation of power, not to mention, other aspects of nationalism. So there are things that Republicans can get away with that Democrats can't in that kind of environment. If the situation changes, if Trump loses, you could have those swap line, that the whole concept would go under a much, much more powerful lens and probably be criticized. I don't think the EU is an issue. But once you start getting below that in credit worthiness, you start going, you're on thin ice politically. Right now, we're at that moment in the fog of war where you can get away with almost anything.
Yes, I'm with you on this.
And so, if you want to be able to get funding for almost any program, if you think you're going to have a shot, and this may be your only one, you take it now, because we are in such a no man's land in terms of understanding about what's going to happen to the economies as they open up over the course of the next 6 months, a year, etc.
It's incredible.
So this is your fig leaf. This is your fig leaf for being able to reward donors, to be able to reward constituencies that vote for you, whether you're Democrat or Republican. This is I think that there's a bipartisan orgy going on, and I don't even know, how much one can even push back on that, because the level of the crisis is such that you just have to make the assumption that a lot of money is going to get lost, a lot of money is going to get wasted. I think there are going to be witch hunts by both Democrats and Republicans over who got the money and how it was spent.
But what's wild when you look at
if we think that there's a divide now and a cleavage now, what we've seen is literally just foreplay. We haven't even gotten to the main event yet.
Wow. When you look at the ECB right now is 145 billion as of May 28th, sorry. Bank of Japan is at 222 billion. Bank of England is increasing now. The Swiss are dipping in. Singapore is starting to really increase daily. And, these are the countries that you wouldn't think are having the shortage of the US dollar. And I think you're spot on saying that this is just the beginning. When Bank of England and Bank of Japan and the Swiss are dipping in, and Australia is starting now, we're at that tipping point. So the last thing I want to pick your brain on for our subscribers, and I really this is a Saturday, just so everyone knows, Tom is so busy on the week because of all the issues he's dealing with at work. And he goes, Marin, I know you have your publication date. I'll make any time on the weekend available. So I thank you so much. We're recording this on a Saturday, so I appreciate that so much. I just want to dip into your brain on commodity prices moving forward. I think you're pretty bullish over the next 3 to 5 years on gold. But what about copper? Where are you at with copper? Because it's a very unique one with the electrification concept. You're heavily involved in copper projects, but it's also, the economy is we're at global growth is a big question here.
So let me split that just into two parts. If you're asking me as a commodities investor, then I have to say I'm merely agnostic. I think we're in uncharted waters in terms of the global economy. It's not something that I feel I have great insights for your audience. And so you clearly know me. When I have conviction about something or an investment, I'm not remotely bashful or inhibited. I don't know where the world economy is going. And when in doubt, to me, go with the assets that will do well if the world does well, like gold and silver, or will do well if the world does badly, as they did in 2008, 2009. I hope the world does well. I'm perfectly comfortable making money from purely the fact that the supply of gold and silver from mining companies is going to decline much more precipitously than people think. While I can see rising demand, and that's good enough for me to take gold to 3,000 to 5,000, and to take silver to 50, 100, something like that. Michael Oakeshott was a political science professor at London University, and he once had a beautiful line. He said, "A true conservative is one who prefers present happiness to future utopia." I have no doubt that gold, silver, the way that I'm playing it, will be generational trades. I know what it's like to make 10 times my money. I know what it's like to make 100 times my money. I did in silver, platinum, and hydrocarbons. It's about assets. So if you're asking me about copper, I'm agnostic. If you find a fabulous copper asset, which is located in a safe jurisdiction, you can make money even if copper is low.
Yep, I'm with you.
Sure. So in that sense, I don't have, I mean, you know, I have one significant copper holding. It's called Trilogy. It's located in Alaska. And, you know, that I'm very comfortable with because it's extremely high grade copper.
Tom, you know, it's funny how many times our roads have crossed. I don't know if Rick shared this with you, Rick Van Nieuwenhuis, but him and I were negotiating for me to do a lead order of 50 million on that asset. And he kept going, well, I got to talk to Tom. And I went, damn, I'm not going to get it because I wanted those warrants. I think that is an incredible asset. And South 32 is very strategic on jumping on that early.
Hey, man, and let me tell you something. That never made it. I don't know whether I'm low on the food chain or high on the food chain, but it never made it to where I am. You know, I love long-term. I love, you know, smart long-term shareholders, especially those that I would like to have dinner with. So that's nice. So I didn't hear that because it would have been my pleasure.
Yeah, we were going. I think that's an incredible asset. No.
Yeah. So if you ask me, and I'm not saying that to talk my own book. You know, my favorite asset in the gold space is Nova Gold because my favorite asset in the gold space is Donlin. You know, I see that as the next Nevada, and it's in exactly the right place. And now Mark Bristow, I call him the White Swan, taking over at Barrick. We've got a partner who loves this kind of stuff as much as we do. So, you know, that's that. On the copper side, I'm very comfortable with Trilogy. I mean, South 32 clearly is as well. It's very, very high grade. But there was a time when I might look at low grade stuff in South America, elsewhere. I may be too old for it now. And it's just not something that I have a strong enough belief in. So
I don't think it's about age. You know, I'm 41.
If you find great assets,
but
like Arctic. Yeah, I think, you know, the assets in the end, it's about the assets.
I'm with
really
you.
believe that.
And I think you're experienced enough to have lived it.
You know, where would I rather be in copper? Would I rather be in Canada or in Kolwezi? I'd rather be in Canada. You know, I mean, we sold the Galore to Newmont. That's a beautiful asset. I mean, it was one mega asset too many for us to deal with simultaneously. But I have no doubt that that's going to prove to be a great story for Newmont and for Teck when it's copper's time. I don't know when that will be. We'll see.
So the last thing I have for you, and again, I know I'm really pushing the time zone here. I don't know if you had a chance to read my Bernard Baruch piece, and, you know, I kind of coined the phrase Billionaire. Some of your friends don't believe in owning gold bullion or silver bullion. What's your take on owning gold coins, gold bars, silver coins, silver bars, being a billionaire?
Well, first of all, send me a list of those of my friends who don't believe in doing something so obvious so that I can rebuke them. There's literally, I mean, anyone who believes in cash has to have some gold. And, you know, it's like Ray Dalio put it, and he's hyper rational. If you don't own any gold, then you don't understand either history or the economics of gold. And he just said, get over it. Gold is a form of cash like yen, dollar, euro, Swissy, etc. So then the question is, if you want to own gold, how do you want to own it? And you don't have to be a troglodyte. You don't have to be, you know, well, I'm running off to, you know, Wyoming with spaniels and shotguns and tins of Spam to understand that you may want to have some gold, in which case, why not own physical? I mean, give me one reason why not.
I was floored, and we'll share it offline, the names, but I couldn't believe it because I'm a big believer in bullion.
Those people are going. I mean, I'm literally the only question I would ask is, why not? Why, you know, why shouldn't one? The only question you would have is, where should you keep it?
That's correct.
I do get the question every once in a while, and by the way, shut me off whenever you want to, but I do get the question, aren't you afraid that gold will be confiscated like it was in the 30s? And I say the same thing, which is, when gold was confiscated, it's because the US dollar was tied to gold. That's why the dollar has the moniker as good as gold, because it was as good as gold.
Yeah.
Once it was demonetized, there's no reason to confiscate gold, unless gold is at such a high level that the reserves at Fort Knox would be able to back up one of the measures of money supply. But when gold is at 20,000 or whatever that number has to be, or 30,000, who knows, with the amount of money being injected into the economy, we can talk about it along the way. It ain't going to happen.
I don't see it happening in the US
blue.
again. I could see it happening in places like Turkey that have already put FX controls, and they force you to surrender the gold at a fixed local currency price.
Absolutely.
Which is, yes, that's what I see potentially happening. So that's what was my, if it happened to Bernard Baruch, who owned 2 tons of gold, it was over 75,000 ounces that he surrendered. And at the time, it was the largest ever reported physical gold holding of an individual in America. Obviously, Warren Buffett exceeded that, but that was a corporate holding through Berkshire. And you shared maybe the last story to end this off is when you went and talked to Warren Buffett about silver, because he was kind of the game changer early on in the silver game. Is that correct?
Well, he was. And the point, a journalist who covers Warren Buffett contacted me after we had the Nova Gold AGM a week or so ago, because I'd made a very quick reference to Warren Buffett in some of my discussion about where we are psychologically in terms of sentiment in the gold space. And the argument that I was making in gold, and how this would obviously impact shareholders in gold stocks, Nova Gold, etc., was that we are now at the point where gold is the least crowded trade in the financial industry, but we're starting to get a rather eclectic range of very, very smart money names who are endorsing gold, which is a phenomenon that you would not have seen 2 years ago, when anyone on CNBC raising the subject of gold would have met with, eyeballs rolling. That's changed, and that's extremely important. By the way, since I made those comments a few days ago, one of the people whose eyeballs would have rolled the most in discussing the topic of gold, one of the CNBC commentators, Joe Kernan, actually spoke about gold. Now, you might, true contrarians, say to themselves, oh my God, if somebody believes in what I believe, it's time to leave. But that's wrong. I've made that mistake multiple times. It's when everybody believes what you believe that you need to be looking for the exit. But we're going to see a buildup over the months and the years as gold embarks upon the third wave of its move higher, of people getting bullish on gold. Once you see it as so mainstream that people are giving you stock tips at cocktail parties, that's when you have to get, a little bit nervous. We're so far away from that. Gold, it's going to take gold going to 3,000 before that happens. So the point that I was making is we're in this sweet spot where gold is not a crowded trade, but smart money like Dalio, like Paul Tudor Jones, like Jeff Gundlach, like Mark Mobius, like Ken Rogoff, a lot of bold-faced names in different arenas are coming out, and without any sense of embarrassment, embracing the asset that until very recently was the asset that people love to hate and hate to love, which is gold. So the point that I'm making is they are now doing to gold what Warren Buffett did for silver in 1997. When I knew, and I'm sure Ross and Bob faced the same issue, every time we spoke to investors about silver, and we were each CEO of a silver mining company, we always got the question, well, wasn't the silver bubble Bunker Hunt? It's discredited. yada, yada, yada. And it had a patina of being uninvestable because it nearly took down a number of financial institutions such that they had to corral as a club in order to be able to beat down Bunker Hunt and some of his allies. So I just made that reference that when Bunker Hunt came into the silver story in 1997, he revalidated in one fell swoop that silver was once again an investment that smart money could look at without shame, and that the fundamentals would will out. And I was having to deal with people saying, well, you think the digital is going to destroy silver halide film, but you don't understand that most of silver halide film now comes back into the market, almost 90% of it. And I was saying when silver was at $4, that rather than going down to $2, which was the conventional wisdom, that it had a better chance of going back to 50. And it never went below 350, and it did go back to 50. And that was because there were so many myths associated with it. Freudian slip. Warren Buffett disabused the world of the myth, and he looked at it and he said, even if I don't believe in monetary metals, silver as an industrial metal with thousands of applications, that's good enough for me. And it's down by 90% from where it was. I'll take it.
In a side interesting story.
That's what's happening now in gold. Now,
right after that investment, I'm not sure if you know, Bill Gates, so after Warren Buffett got into the silver, I think about a year after is when Bill Gates backstopped Ross Beatty's Pan American gold finance.
Bill actually invested in Pan American, in Ross, around the time that George Soros invested in me. And our company, and it was great because Bill, I think, looked at silver maybe before Warren did.
Oh, really? I thought it was after. Okay.
Yeah. No, Bill became an investor in Pan American before we went public. And
I thought it was around 98, 99. Okay, I got my dates wrong then.
I believe, I could be wrong, but I believe that he was there earlier than 1997. But okay. You know what? We can Google that. So Ross had Bill, I had George, and that was helping to get people to think silver might be something that we could look at unemotionally, and the fundamentals really were that great. But there's nothing like Warren Buffett to sprinkle holy water on something and make it safe for capitalism. So, unbeknownst to either of us, he was building up a position. And it was announced the week I went public.
Oh.
And we were able to pull off the biggest IPO of a mining company, by the way, in New York, not in Canada, but anywhere in North America or anywhere in 1997. And it was a terrible time to go public. But Warren Buffett inoculated us from that issue so that we could discuss the fundamentals of silver, and more importantly, the fundamentals of an asset that we discovered in Bolivia, which really was a category killer. And so we were able to get that deal done. So years later, I was at dinner with Warren Buffett, and when I was introduced to him, I said, I really need to thank you. And he said, why is that? And I told him the story, and he chuckled, exactly like you would expect Warren Buffett, who's got a just, really beautiful demeanor. And he chuckled and he said, well, that's great to hear. I'm glad to hear it. He made money on it. I think he probably he exited probably because he got so many more questions about his silver position, which was such a small holding relative to his other ones, that he probably decided, who needs this? And Charlie Munger, has always been, I wouldn't say agnostic, I guess an atheist with regard to, to the whole precious metals idea anyway. So he probably said, I don't need this. But I think he made about $100 million on it. But he certainly made my week. And so when the journalist called me and said, can I ask you more about that? Yeah, I said, sure. I had almost forgotten this little vignette of my maybe my memoirs one day. And he said, so you really owe Warren Buffett a favor? I said, yes. I said, there are some Bolivians who think that I should house my art collection in La Paz because, I made a fortune there, which, it's an interesting concept. And, maybe the world is going in that direction anyway. But I definitely owe Warren Buffett one. And I guess we all did, because it helped Ross, it helped me, it helped Bob Quartermain. Having Warren in there, again, it was the inoculation for investors being able to look at the space. And once they started to look at it and understand the supply-demand equation, silver was on its way to a 10x multiple at one point.
That's great. Tom, well, you made my week. You made my week on this, and thank you so much for sharing this. And I owe you a huge favor. So next time you're in Vancouver, you're coming over to my house. We're going to have a nice bottle of red in my cantina. So that's kind of like my little holy place that I like to unwind in. So I think we're going to have a lot of fun here. At least
you have a deal.
Sounding boards. At least being sounding boards. I have a feeling eventually we're going to work together on something which will be really fun. Until then, thank you so much for sharing your knowledge with my subscribers.
It's absolutely a pleasure. Keep thinking those intelligent, iconoclastic, out-of-the-box thoughts. You teach me, Marin, and I'm grateful for it. Thank you.
All right. Enjoy your weekend and stay healthy and safe, okay? We'll chat soon.
Thank you. You too.
All right. Thanks so much, Tom.